Hello guys, this is Dharmesh Stark. Today I will talking about taxation on virtual digital asset. So let's begin. Background for taxation of VDA. Let's understand the reason why it is required. The first is, in this decade, virtual digital assets have become immensely popular. The magnitude of deals in VDAs has increased substantially, both in terms of number as well as value. Thus, VDAs are occupying pivotal position in economy of all the countries. The gifting of virtual digital asset is becoming fashion of age and fancy, for the same is fast catching up, particularly in each tech world. The veil of secrecy has made it more advantageous for anti-social and anti-national elements to transact in cryptocurrency and remain in dark territories. It believed are holding cryptocurrency for obvious reasons. The fluctuation in value of cryptocurrency are very wide and unthinkable. This is the reason why the RBI for a very long time has put up a red flag toward private cryptocurrency. Implication cryptocurrencies on national security and financial stability can be serious. These and such other factors must have prompted to the government to provide this incentive for dealing in cryptocurrency. So this is the reason why the taxation of virtual digital asset required. In latest Finance Bill 2022, the provision relating to taxation of virtual digital asset VDAs are introduced. In budget speech, our Honorable Finance Minister Srimati Nirmala Sitharamanji, while moving the Finance Bill 2022, dealt with provision of taxation of virtual digital asset in para 131 in the following words. There has been phenomenal increase in transaction in virtual digital asset. The magnitude and frequency of these transactions have made it imperative to provide for specific tax regime. According for the purpose of taxation of VDA, I propose to provide that any income from transfer of any virtual digital asset shall be taxable at the rate 30% flat rate. No deduction in respect of any expenditure or allowances shall be allowed while computing such income except cost of acquisition. Cost of acquisition means purchase price plus stamp duty or registration fees or any other expenditure which are necessary to complete acquisition of such asset. In this case, while purchasing cryptocurrency or digital asset, we pay some amount, some portion of brokerage to crypto exchange. So therefore, the amount paid toward brokerage is also part of cost of acquisition. Further, loss from transfer of VDA cannot be set off against any other income. Further, in order to capture the transaction, I also propose to provide for TDS on payment made in relation to transfer of VDA at the rate 1% of such consideration above the specific monetary threshold, which discussed later, and gift of VDA is also proposed to be taxed in hand of recipient. The normal provision relating to gift will applicable on VDA. For the purpose of effect of this bill, Section 115 BBH and Section 115 BBI relating to tax on VDA introduced. In Section 115 BBH provide that total income of SSA include any income from transfer of VDA. The income tax payable shall be aggregate of the amount of income tax calculated on income from transfer of VDA at the rate 30% and the amount of income tax which the SSA would have been chargeable had the total income is may reduced by the clause 1, means total income out of which 1% of transfer or gain on transfer of VDA shall be taxable at 30% and remaining other income shall be chargeable at normal rate applicable to SSA. Further, subsection 2 of said section provides that anything contained in any other provision, no deduction in respect of expenditure other than cost of acquisition, allowance or set-off shall be allowed against this income. No set-off or loss from transfer computed under this section shall be allowed against any other. Means you cannot set off this loss against any other income or nor you carry forward. Definition of VDA. Any information code number token generated through cryptographic means or otherwise by whatever name called providing digital representation of value action with or without consideration with a promise or representation having inherent value or function as store of value or a unit of account including its use in any financial transaction or investment but not limited to investment scheme. A non-fungible token or any other token of similar nature by whatever name called or any other specified by government in official gazette. In gazette, government specify or we can say exclude certain thing from the definition of VDA. First one, gift card or voucher being recorded that may be used to obtain goods or service or discount on goods or service like Amazon gift card, etc. Mileage point, reward point, loyalty card being record given without direct monetary consideration under award, reward, benefit, loyalty, incentive, rebate, promotional program that may be used to redeem only to obtain goods or service or discount like credit card, code or we can say rebate, subscription to website or platform or application. This notification shall come into effect first from the date of publication in official gazette. So these things are excluded from virtual digital asset VDA, Indian currency, foreign currency, other things specified by government. Non-fungible token was transfer result in transfer of ownership of underlying asset and transfer of ownership of such underlying tangible asset which is legally enforceable in the gift card, reward point and subscription to website or application. Now let's begin the taxation of virtual digital asset till 31st March 2022. Means before introduction of this section, there are no specific provision relating to VDA. Therefore, expression of various taxpayers were adopting different approach for taxation depending on character of VDA in their respective end. Income was considered to be taxable under that income from PGBP, where VDA is held as business commodity. Taxable under that capital gain if held as capital asset. If taxpayer trading in cryptocurrency as token trade and same also reflect by way of volume and frequency, the income will consider as business income. In case of straight transaction in VDA, the residuary had income from other source found reporting of income from transaction in VDA. There are no specific taxation. Thus, If the asset held the VDA's investment, then depending on the holding period of capital asset, say 36 months, we consider or classify as long term if beyond 36 months and short term if hold lower than 36 months. LTCG are subject to tax rate at 20% and indexation benefit available. STCG are taxable as normal rate. So in summarized manner, if the transaction in cryptocurrency held as stock in trade or simultaneously higher volume, then it's considered as business income, taxable under that business income head PGBP and taxable at normal rate. If the cryptocurrency or crypto asset held as capital asset investment, then it taxable under the head capital gain, classify short term, long term based on period of holding. If long term, then deduction or we can say indexation cost benefit available. If short term, taxable at normal rate, long term, then taxable at 20% rate. And if there is no specific ground for holding, then it taxable under the head residuary head income from other source. This will apply till the date of 31st March 2022. After that, the new provision will apply. The benefit of section 54 EC will available against digital asset. Before the new provision applicable means till the financial year 21-22, the income from virtual digital asset will taxable at based on normal activity like business or capital gain or other source. After that, from 1st April 2022, the new section 115 BBH will applicable and the provision relating to 30% taxation, no expenditure other allowed, no set of carry forward will applicable. In summarized manner, after the 1st April 2022, the section 115 BBH provide separate system for taxation of income from transfer of VDA. Income from transfer of VDA shall be subject to tax at 30%. The benefit of basic exemption limit threshold will not available even if SSC has sustainable loss. The transfer definition are same as earlier relating to transfer made of capital asset specified under section 247, sale, exchange, relinquishment of asset, extinguishment of right, compulsory acquisition by government, any transaction involving possession of any immovable property to be taken or retained, part performance of contract, any transaction by way of becoming member or acquiring share of cooperative society company AOP BOI, same as earlier. Now the thing is how income from transfer of VDA is computed. For the purpose of ascertaining income from VDA is required to be ascertained separately. For ascertainment of income from transfer of VDA, two provisions have made in subsection 2 115 BBH. Subsection 2 are to be considered nothing notwithstanding anything contained in any other provision of Income Tax Act concerning computation of income or any other provision to be ignored, means any other provision, normal provision will not applicable. for the purpose of computation of income from VDA. Subsection 2 of 115 BBA state that deduction only in respect of cost of acquisition allowed, no deduction in respect of other expenditure or any other loss allowed, no set off or carry forward loss allowed. Deduction only in respect of cost of acquisition on VDA allowed, which already discussed. Common expense. If you treat VDA as business income, then the common expenditure like any other with normally overhead applicable will not be allowed because section specifically provided no deduction in respect of any expenditure other than cost of acquisition will allow. It doesn't matter if you treat as a business income or capital gain or other source. The expenditure only cost of acquisition will allow. If you treat as a business income, then this turnover will include it in your total turnover for the purpose of 44 AB 1. Head of income. If you treat as a business income, if transaction is VDS frequent and voluminous, it may help the taxpayer is trading as such asset. In this case, income from sale of transfer VDA is taxable as business income. The income net of cost of acquisition will be taxable at 30%. Surcharge can be levied up to 37%. Will the VDA is held as stock in trade, any income from sale transfer shall be included in business and profession head. Now, if you treat as capital asset, taxation under the head capital gain, government did not clarify if the VDA is currency, commodity or security. VDA may be classified as income under the head capital gain if purchased by SRE for the investment purpose. Then further clarification relating to long-term, short-term will depend on period of holding. If you hold more than 36 months in long-term or less than 36 months in short-term, the tax shall be applicable at 30%. Even if it's long-term or short-term. However, if it is long-term capital gain, then surcharge will restrict it to 15%. IFRS, the normal gain will chargeable under the head IFRS if not covered in above two head PGBP or capital gain. Now the question is whether advanced tax provision will be applicable. The answer is yes. SSC earning income from sale of VDA is required to pay advance tax as per applicable advance tax provision under income tax law. Now what is treatment for loss of transfer of VDA? As earlier provided, loss will not allowed or set off or carry forward will not allow. Therefore, it will be lapsed. Here mentioned section 115 BBH provide that loss from VDA not be allowed to be carried forward for succeeding assessment here. Now the TDS provision, new section 194S were introduced relating to payment on transfer of VDA. TDS at 1% shall be deducted while making payment provided In case where consideration for transfer of asset is value in kind or exchange of another cryptocurrency or virtual digital asset where there is no part in cash or partly in cash, partly in kind, but the amount part in cash is not sufficient to meet the liability of deduction of tax in respect of wire transfer. However, no TDS is deducted if consideration payable by specific person and the value of such transaction does not exceed 50,000 rupees. Let's consider what a specified person means. Specified person means being individual HUF was total sale gross receipt turnover from business or profession not exceed 1 crore in case of business or 50 lakh in case of profession, and being individual or HUF not having income from business. Means if you are individual or HUF and your business turnover will exceed 1 crore or 50 lakh as the case may be, then the limit of TDS, the provision relating to TDS will applicable only if amount exceed 50,000. Other person the limit is 10,000. Means in summarized manner, if your business or profession and your turnover exceed 1 crore if business, 50 lakh if profession, then the if amount is payable by you is exceeding 50,000, then TDS applied. Otherwise, in other case, the amount of 10,000 threshold will applicable. Now the last part is when the virtual digital asset received as gift are taxable. The provision relating to gift 56.210 which applicable normally if the amount exceeding 50,000 then taxable. If amount received from this person then not taxable, the normal provision relating to gift will apply. Some practical illustration relating to VDA. If your income from salary 180, interest 20, VDA gain 45,000, your total income is below threshold. However, it doesn't matter if your income is below threshold. You have to pay tax on VDA at 30%. So tax on income from VDA is rupees 14040 will be payable. There is no specific provision relating to rebate is made under VDA provision. Therefore, we might assume the rebate is available against this income. Therefore, if your total income including VDA gain is less than 5 lakh, then the rebate up to rupees 12,500 will available. Now question is whether 44 AD is applicable. The answer is no. Income from business is 1 crore 90 lakh, income from VDA 11 lakh, total exceeding 2 crore. However, Section 45A deals with presumptive taxation scheme for eligible assets. In summary, Section 45 will applicable on income from business. and section 115 BPH will applicable on VDA. Therefore, 44 AD is not available against VDA income. However, for the purpose of tax audit, it included in turnover. So if your business income is 90 lakh, transfer of VDA is 11 lakh. If is as per section 44 every person carrying on business, if turnover exceed 1 crore 50 lakh, get his account audited. Since total income in business from business is 1 crore 1 lakh, therefore tax audit 44 AB will applicable. In summarized manner, let's conclude. In cryptocurrency, or we can say virtual digital asset, before 31st March 2022, current year FY 21-22, if you have income from transfer of VDA, then it taxable at normal rate. If you treat as a business income, then expenditure common expense will allow against business income. If you treat as a asset investment, then capital gain provision will apply based on period of holding. It treated as long term or short term. If long term, taxable at 20%. Deduction under section 54 EC will available. If you treat as a short term, taxable at normal rate. In other residuary rate, if you treat as other income, then normal rate will applicable up to 31st March 2022. After this, if you treat as a business income, it will included in turnover for the purpose of audit. Common expenditure will not available against this income. No any other expenditure deduction except cost of acquisition will allowed, and it taxable at 30% flat rate under section 115 BBH. If you treat as a capital gain, capital asset, then based on period of holding, if it's short term or long term, but it doesn't matter, it taxable at 30%. However, if it's treated as long term, then surcharge limit will up to normal limit. If you treat as a other source income, then provision normal provision will applicable taxable at 30%. Now let's focus on provision relating to TDS. If you are specified person, say business or profession having turnover exceed 1 crore or profession receipt exceed 50 lakh, then you have to pay deduct TDS at 1% over and above rupees 50,000. If you are other person and if you are paying amount relating to transfer of VDA, then you have to deduct TDS if amount exceeding 10,000. TDS rate will be 1%. There are no specific provisions relating to rebate in VDA, therefore we might assume rebate under section 87A will available if your total income including transfer of VDA is up to 5 lakh, then rebate up to rupees 12,500 will available. If you have any query or doubt regarding this, please comment on the below. Thank you, that's all.